Hey guys, it's Nolan from Trade and Train. We hope you are really well and staying safe, and we hope that trading's going well as well. So we thought we'd send out a video for you. We haven't sent one out in a while, but we've got the dollar index making some moves, and there are definitely some good trading opportunities out there for this week, today. The thing is with trading, you only need one or two good trades a week to make your money in the market. So a lot of people think it's quantity. It's not, it's quality. So listen, if you can get two good trades a week, make 2% on each of those trades, maybe even more, but let's just say 2%, then you can make 4% a week on two trades. That's 16% a month. Obviously you're going to have losing trades in there, but this is why it's good to have a positive reward to risk, i.e., going for those 2-to-1s or 3-to-1s. But yeah, it is quality over quantity. So even if you're only taking one or two trades a week, it doesn't matter. As long as those trades are quality trades, you've stuck to your rules, then brilliant, So anyway, looking at the dollar index, we've got the dollar index trading within this box range, as you can see. Last week, or the week before, we had this looked like a fake out candle breaking out of this box range. Then we opened up the market with a gap. We started to see the dollar index being bullish, and it's actually seasonally bullish. So we would expect the dollar in May, close up until the end of May roughly, we would expect to see the dollar index go up. That's what normally happens around this time of year. So we saw that bullish momentum. At the end of the week, we had the non-farm payroll numbers come out. We saw the dollar index sell off. And look what happened. We actually closed this gap here, which we do normally see gaps closed, not always straight away, but that's what happened here. And then when the market opened again last night, we've actually seen another gap. So the market closed here and it opened up here. So if you look at the daily candle right at this moment in time, that's what it looks like. So we're looking for the dollar index for the rest of May to be bullish, and looking for it to come back at least into the top of this box range. So look to buy the dollar index against weaker currencies. So Aussie dollar and Kiwi dollar, so Aussie against the US dollar and Kiwi against the US dollar, look very interesting. So let's have a look at those. Okie dokie. So this is the 4-hour chart. Now look at these 4-hour candles here. Very, very bearish. Very, very bearish. So we're looking for pullbacks now to get into the market. So looking at price action here, we can see this little area there of support broken through. So that would be an area that we would suggest looking for if you're an intraday trader, or even if you're an end of day trader. You could place a sell limit there if you wanted to, but if you're an intraday trader, look for price to come back into this area. Look for a rejection there, look for sellers to come in, and that could be a really nice trade. Let's just say you're intraday trading, you got to sell from somewhere up here, nice tight stop loss. You could be getting just back trading to this low here. If you wanted to do that, we could be talking, well, we're talking over 3% just on that one trade alone. So Aussie against the US dollar, definitely be looking at that. Some of you might be trade with EMAs as well. I don't know, 50 or 20. So use your EMAs or whatever strategy you've got to look for a pullback. But just as an area to sell from, that area there, looks great. If it can come back into that zone, because it doesn't really appear to have been retested, so we'd love to see that being retested. So around about 0.6510, somewhere around there. If price can come back to that level, reject, then that would be a great area to sell from. But seasonally, dollar is bullish and the Aussie is bearish, so a great pair to be trading. Let's have a look at Kiwi dollar. I think it's pretty much the same, to be honest with you. Well, very similar, put it that way. Yeah, again, you've got that kind of same kind of price action where we've got this support here, support. It'd be great again if price could come back into that zone and we see a rejection for downside. So look for price to come back into that zone and then look to sell. I mean, even if you wanted to just, if you could even put a Fibonacci on there. Look, let's just say we draw it from there to there. So we go from the start of the impulse to potentially the end of the impulse. Could use a Fibonacci to look for a pullback, 50% retracement. You could target this minus 27% fib here, or that minus 61.8. So, we could be talking again. I don't know, let's just say you had a sell roundabouts there, targeting that 27% fib, maybe 3.38. Second target 5%. These are the type of trades you should be looking out for, because you literally just need to trade one or two of those a week, and that's your week done. These are quality trades being laid out for you. So just look at price. May not come to this level. Hopefully it will, or it may come to this 50%. But definitely good areas to look out for further shorting possibilities. Now I'm going to drop in a potential trade which isn't to do with the dollar, the US dollar, but could still be a nice trade, and that's this Euro Aussie. Look on the Euro Aussie on the daily time frame. Look how this daily candle is forming. It's a bullish engulfing bar right at this moment in time. So we are looking for a little bit of a pullback on this to try and get into the market. You can see that change of cycle there. Didn't mean to use an arrow, mean to use a trend line, something like that. You can see that breakout. And I think, in fact, if you look at the MACD, what time frame was it? Was it this time frame? Or was it the 4 hour? I can't quite remember. Yeah, we've got price come into that zone, look. Bounced there, and it's bounced again. We've got MACD divergence. We've got price divergence. We've got that low here, and we've got a higher low on the MACD, saying that bearish momentum isn't there, or wasn't as strong as it was there. So, just looking for upside on Euro Aussie as well. But you need to look for, obviously, for a pullback. So we're going to see where it comes back to. I mean, it could come back to, you can see these candle lows here, look. Maybe it could come back to somewhere around there, around about 1.6635. You can see that support there, look, resistance. It'd be really nice if it came back to that level at least, and then see if we can see a reaction from there. If you can't be in front of the charts, but you've got an area where you're really interested in buying or selling from, then simple, use TradingView, and you can go, if we're looking at this area here, just go right click, add an alert, create, set an alert. So if price comes back into that area, TradingView will alert you. Might be worth actually just dropping that alert in a little bit higher, so it gives you a kind of a little bit of notice before it gets into that area where you're interested in, looking to trade from. So you don't have to sit in front of the charts all day, to trade. Have your areas where you're interested, and you can just use TradingView if you want to put your alerts, and if price gets there, it will let you know. So, you can go about your day doing whatever you're doing. So 3 charts of real interest: Aussie dollar short, Kiwi dollar short, and Euro Aussie long. Look for those pullbacks. Look for that change of momentum once we've had those pullbacks. So guys, hope you enjoyed that. Please like the video if you liked it. Share it as well. Subscribe to further updates. We do have a free Telegram channel where we post free analysis. I'll drop that in the I'll drop that underneath the video as well. So if you're not a member of that, you can just click on it and join the free Telegram group. So listen guys, thanks for listening, and yeah, safe trading, and I will speak to you very, very soon. Bye for now.